Good evening, everyone. Welcome to Stellwagen Beer Co. No. So I did my first slide deck because I'm so old that I use PowerPoint. So I didn't actually know what a slide deck was when Carla first asked me. But I did create one, and I have it on my phone. Carla has the link. I have the link. So if you want it, either one of us has the link. Be happy to fire it off to you. So just want to grab something here real quick. So the wicked awesome loan officer, Patrick, brought up that he's been in the business for 30 years since 1990, 30 plus years since 93. Same myself. So I graduated from Babson College. My dad said, you have 2 weeks to do whatever you want and then show up to work. I showed up to work and I didn't leave, and it's been 30 years. So from a cycle standpoint, we saw 1991-2. Then we saw 2008-9. And then what? So now we're here to talk about auctions, because I think that the market is cyclical. The market has not been cyclical, probably because of market manipulation by whatever powers that be that are out there to keep things propped up for different reasons. But at some point, things have to shake out. So now you guys are seeing particularly two segments, retail and office space, that is a troublesome area, but it's kind of under the rug right now because houses are so hot. There's not enough houses, there's not enough condos, and things are selling like lightning fast. I'm going to list it low, and I'm going to get multiple offers, and then I'm going to sell it. That's an auction, in a way. But what happens when it all changes? What happens when rates go up? What happens when the commercial part of it pulls down the residential part of it? Well, that gets rid of all the part-timers, and then all the people that have done it through the cycles, they're still here. And they laugh and they say, oh, you can go 10 bar at the Stellwagen, as I'm going to do, or wherever, name the bar, insert bar here. And so the cyclical nature of things, that has a big impact. And when things change, that's when you see more auctions. Because you all know, my wife Lynn knows, when you say auction, people think distress, they think foreclosure. The first thing, oh yeah, foreclosures. Well, so that's been our sneaky little niche, is that my dad started the company in '76. I came to work with him, second generation. And our niche is we do auctions in addition to foreclosures, which I will do if a bank's going to pay me to do it. We do auctions on behalf of the ownership. A lot of them. They've hired us. I'm a realtor. I'm a broker. I'm an auctioneer, but we only sell at auction in that auction format. Because why? Because that's our niche. That's what we do. So people don't have a good understanding about auctions themselves. So to tell you guys real quickly, we've done over 16,000 auctions, a ton of them, and a lot of you, based on looking at my hairline and yours and the color, the grays of it, FDIC, RTC, recall, the big turnover in 90, 91, 92. We did thousands of auctions a year. We had 5 teams going in 3 directions every single day, doing multiple auctions to kind of clean things up. Well, I'm not saying we're going to get back to that, but we've been through all of that. The main thing I'm trying to say is that you say auction and say, what's the first word you think of? The person says foreclosure. It's the first thing they always. So I'm constantly having to educate people about auctions. I'll tell you, I made a little punch list. We do private auctions for people. We do foreclosures, we do bankruptcy auctions, we do secure party sales, condo lien auctions, tax lien auctions, tax title auctions, receivers auctions, commissioners auctions. The private auctions we do, some of them are what Maddie Jenkins looks for. I'm looking for absolute auctions with no reserve. They're going to sell to the highest bidder. Others have a reserve. Sometimes they disclose the reserve, sometimes they don't. Why do they auction? Somebody dies, there's an estate, there's a divorce, parting of ways, there's a partnership that goes south. I need to take advantage of that opportunity to become liquid, so I need to sell now. There's a tax benefit to me selling immediately. Maybe on the buying side, it's like I need to facilitate a 1031 exchange and I need to buy something now. So there's a lot of immediacy and urgency to all of our real estate auctions, and they happen for all that myriad of ways that I just ran through. So if you're selling at auction, One of the cool things is if somebody is under the gun, or they're relocating, or there's some reason of urgency, the auction's 30 days of marketing and then 30 days to close like clockwork. The buyer's paying all the commissions. There are no contingencies in the auction except title. So understand, you can't get involved in an auction if you're not cash ready, or if your bank requires a home inspection, or they require an appraisal. You are there with all the other cowboys and cowgirls to bid on the property cash and close, with the one contingency being title. So we're only dealing with the most cash ready people in all of our auctions. And that doesn't mean they have 500,000 in greenbacks in a chest under the mattress. It means they have a line of credit. They have partners. They have rich family members that are willing to front them the money with the hopes of financing it later, right? They'll finance with Pat later on. But in order to acquire the property in that opportune moment, they have to be cash ready. Again, it's only subject to clear and insurable title. How many of you in here are real estate brokers? Okay. All right. So there's a lot of ways that brokers can earn money through auctions without being an auctioneer per se. You can rep a buyer at an auction. You register them on my site. You show up with them. You help them. You ask questions, and you can get what's close to a co-bro commission. The way you're going to make a ton of money is you have a seller and it hasn't sold and you need to sell it quickly. And I usually say this: if you're going to lose the listing and they're going to hire somebody else, so the listing's expiring, or they want to get rid of you, or it hasn't worked out and they're a pain in the butt, most particularly if they say, well, I was thinking about auctioning it. Like any of those answers, if you bring it to me, you'll make a bigger commission than you would have on the actual transaction you were doing, and faster than you have in your career. Because it's closing, it's going to be 60 days, you will get your commission. So from a lead standpoint as an auctioneer, the number one segment is estates for us as far as our leads. Number two, real estate brokers. This client is a pain in my behind. I have done everything. I've spent money. I've catered open houses, and nothing matters. And they start talking about wanting to do an auction. Well, bring it to me. We will close the deal and get it done and get you your money and get you away from that tough client. Through COVID, one of the biggest reasons we conducted auctions were for people that wanted to relocate from Massachusetts to Florida. Maybe New Hampshire, maybe South Carolina. I want to relocate. I don't want to wait. I've already put money down on my condo in XYZ, Florida, and I need this sold yesterday. So that was one of the biggest things. But think about this. A lot of them older, been in the house forever, septic fails, crack in the basement, this, that. I don't know. We get a bunch of stuff. When we're selling at auction, we are truly selling as is. We have to disclose everything we know, but we're just conveying title. So from a seller's perspective, they're able to just name the day. The terms are the same for everyone, and it's a really good transition. So through COVID, I'd say relocation was the number one reason that we're hired to sell property at auction. Now, if you're repping a buyer at an auction, I will tell you that as the broker, your job, or even whatever, as the friend, your job if you're at an auction is to do all the online due diligence you can from the auctioneer's office, from online, the assessors, the town, the city. Go to the open house. Bring a home inspector with you to the open house. Bring them to the auction. Ask the tough questions for your client. The things that people get confused about is, what are the liens? What are my financial responsibilities? When I do an auction, the number one thing I do is when I get to the point, I'll say, everyone pay attention. This is your financial responsibility. This is what you're responsible for. No more, no less. And give them the exact deal so they know, because if people don't understand, then they're not going to bid. So that's one of the big disclosures that we make. If you're ever going to bid at an auction, a couple things. If it's my auction, that's easy. You just call my office. If it's somebody else's auction and you just don't know because you're not getting the information, I'm not sure. Is it a second mortgage? Is it a first mortgage? Like, what are the liens? How is this going to work? You can still call me. Take a card. I know everything auction. So if there was an auction coming up, here's what I know you'll need. You'll need to be prepared with bank funds. You should pepper the auctioneer with questions on auction day. If you try to do it with me, I'll say, we could have talked before I'm conducting the auction. The other guy you go to, he's going to answer all your questions in front of everyone, and that'll be helpful to you. You got to close in the 30 or 45-day window. You have to understand there's no financing contingency. And I think the most important part is a buyer at an auction, whether it's you or a group, you have to set your number and then end it. That's it. My job is to pull you in and get you to keep bidding. And I think it's important in an auction as a prepared buyer, set your limit, bid to your limit, but don't bid beyond it because you had a limit for a reason, because you educated yourself on the property and you know what you were prepared to do. So auctions are not just the stress. Auctions happen for many reasons. I came here tonight to be able to talk to you about all of it, but I think in a lot of the talks I've given, it's better off if people just ask me questions about an auction they went to, an auction they may go to, or just generic auction questions. So if anyone has any, there is no stupid question. Hey, how does this work? Hey, what's my responsibility for this? Does anyone have any particular questions about real estate auctions at all? The engineer in the back. So in a hot market, you might pay the same or overpay in an auction because it gets a little crazy. In a declining market, yes, you're going to get a discount of probably 10, 15%. Because, think about it. What happened during COVID was brokers got smart about it. And what they did was they underlisted to open the door to more people to create a competitive atmosphere and get a little bit more money than the list price. So we saw something we didn't used to see. Real estate brokers underlisted and sold for more. Back in the day, it was you listed and then sold for a little less because there was a negotiation down. The negotiations went up. So in an auction, we only go up. We don't go down. So when things, I'd say 2021, 2022, we were averaging like 25 bidders at an auction, and it was crazy. Things were selling for so high that I was nervous they weren't going to close. I'm calling the bids, and I'm kind of giggling inside because I'm excited about my commission, but I'm wanting it to stop too because I want this deal to close at the same time. So right now we're at a plateau. So I think I really couldn't say, maybe there's a slight discount just because of the cash terms of the auction. But in an inclining market, you're paying maybe a little more. In a declining market, definitely 10 to 15% off the top. Yep. Yeah.
Septic systems.
Yeah.
Do you have Title V?
Yeah, great question. So I've got a few right now that I can give you examples, but I will tell you that when we're selling a property at auction and the seller asks me, what should I do about the septic? I tell them, get it inspected. That's going to cost you $300-400, and you're going to get a passing or a failing Title V report, which we then put in the bidder package, and now we've told everyone. And to them, that means that's the swing in money, right? It's 20, 30, 35 grand. So we're able to, in the auction P&S, it'll state that the septic's the responsibility of the buyer, okay? There's the seller's not given any credit. It's just they're bidding based on that knowledge. The only time I ran into something difficult was recently in Harwich, where we sold it in that fashion, and this is a change. In the town of Harwich, the Board of Health intervened prior to the closing and said, we want this, document signed by the seller and the buyer, first of all, stating that the property is being sold with a failed septic, but more importantly, the buyer had to show proof of the wherewithal and the funds to be able to repair the septic. And once that they had that document, I haven't encountered that before, because we're usually just putting it on the buyer, and then the buyer is going to obviously be contacted by the Board of Health, and they're going to say, you get 6 months, or you have a year. So we're putting it on the buyer, but we're trying, I have some sellers, and they'll say, yeah, I'm not going to do that. I don't know if it passes. I don't know if it maybe it does, maybe it doesn't. And I'll say, okay, so all that's going to do is make people bid 30 grand less than they would if they don't have an answer. So that's how we're handling septics. Yes.
So in that situation, how does that work with, say, the perk test? Because then you need a perk test on to see if you even have a new system design.
So when we're selling at auction, the purchase and sale agreement states unequivocally that it's being sold as is, that the septic is the buyer's responsibility, and that it will be their responsibility to remedy it or not, whatever it takes post-closing. So it does not hold up the closing.
Conversation I had on my way here tonight. House in Milton, non-septic. It was thrown at me that, well, there's supposedly a rule that, once the house is being transferred, it has to be on. I don't know about that.
Yeah, so I think what I've seen most recently is it's town to town or city. It's town by town approach, because I know right now I've got one in Mashpee, and the guy's system fails, and we're selling it with the buyer's being the buyer's responsibility, but there's some waiver that can be filled out that allows the seller to not do anything and the buyer to not do anything until which time they can connect. In other words, it fails, but they're going to give them like a year leeway to connect to the sewer, because the price to connect to a sewer or to put in a septic in some places, depending on where the house is situated, could be even money, right? Talking 30 grand either way. So they're not forcing somebody to tie into a septic for 30 grand when in a year and a half the town's going to say connect to the septic. So there's some sort of, it's town by town, and there's a waiver that I think needs to be executed at the closing to kind of facilitate that. Septic's the biggest reason I was hired to sell houses in the last 3 years, because you've got an older person, they don't have the $35,000, and they want the net proceeds. They physically can't write a check to do it, and I guess you could do it as a credit, but in a normal transaction, the bank's not going to lend the money without the septic being done anyway. So it's almost like the auction has to be the vehicle in some of those instances, even with a credit from the seller, because the bank's not going to lend the money, generally.
You can close if the septic is not done as a cash buyer, right?
If you've stipulated it in the purchase and sale agreement prior to the closing, yeah. But throw that out if there's a bank involved, because I'm talking about deals, like you said, as long as it's cash. The bank's going to require it. The bank's going to require an appraisal and a septic, and obviously smoke CO2 certificate. So, but as soon as that closes, you're going to get the buyer's going to get contacted by the Board of Health and say you've got 6 months or 9 months or 12 months to bring the system up to code, or start to get fined. And especially when you get to places like Carla's mentioned where she wants to be, like the Cape. There's not a lot. They're forcing the sewer hard now because all the nitrates, and it's like, cramming a lot of people down there, and they don't want more septic systems. So. Yes. So we generally have one open house about a week before the auction for a couple hours. I encourage people to bring whoever they want to that open house, because then the next time's the day of the auction, like an hour before the auction, but your mind's elsewhere at that moment. You're thinking you're going to be bidding in a minute. So that's the time. You bring a contractor, you bring your handy uncle, you bring a home inspector. I've had people, some of them like, can you get out of the way because you have a home inspector with a pencil, and he's like, got his ladder, he's crawling up, and he's not letting other people walk through. But I don't mind that. Like, that's your opportunity to get a look at it. And if I know of any issues with the property, as a broker and a realtor, I have to disclose those to you, and I will. Okay, so that would happen in just a foreclosure, or I guess in a family dispute where somebody wouldn't leave, and we're hired by the trustee of a trust that's a family trust, and I have run into that too. But 99% of the time, you're talking foreclosure. So you're buying completely sight unseen, and the best thing you can do is walk around the property and check it out from looking on the foundation and through the windows. But a good question about tenants. In a foreclosure, they are strictly your responsibility. If there's a lease in a foreclosure, unless that lease is recorded at the registry and it has a term of more than 7 years, it gets wiped out by the foreclosure. But that doesn't mean the person leaves. So then they become, if you want them out, they become a tenant at sufferance. And it'll be your job to evict them. And I know a lot of guys that buy and sell a lot of auction properties, and sometimes the person that's in there puts their tail between their legs and just walks out quietly in the middle of the night, and then others where it takes them 2 years to get them out, and everything in between. Most of them will just give the people enough money to get them to leave. Cash for keys is the term, and it could be $1,000, it could be $5,000. They're looking at, okay, what's it going to cost me to hire an attorney, the carrying cost to carry this property with insurance, taxes, etc., the opportunity cost, loss, and they'll come, maybe $5,000. So it could be upwards of $5,000 to get them out. But that may be the best opportunity. And I've heard attorneys even give that advice because that may be the sole option or the best option.
But you're also not going to get title insurance.
Most of them will not underwrite it. I think there are some that could. So from a title insurance standpoint, I think the big houses won't. That's a good question. I know that's changing because we've had some instances where the title insurance companies just changed a rule in foreclosures where oftentimes the foreclosures get postponed because somebody files bankruptcy, somebody files a TRO at the court, somebody does a forbearance agreement, so it gets postponed. The bigger title insurance, we used to postpone some auctions 6, 8, 10, 12 times before we finally did it. And the person that came every time and was last standing would be the person that bought it. Now the title insurance companies will not write title insurance if it's been postponed more than 3 times. They require the attorneys to republish the legal notices in the paper and basically start from scratch because they don't deem it commercially reasonable when it gets postponed that many times because people have lost interest. That's very new. That's in the last year or so. Yes?
So when you guys are posting open houses, you put it in MLS under Big Manning, or you put it under whoever referred it to you, but it's in MLS.
Yeah, if somebody has an active listing on a property, commercial or residential, and they refer it to us and it's on there, we leave it. And then in the comments, mention how our involvement is. If someone the listing gets cut off and then I'm stepping in as the broker, we'll put it on. And what we'll do is we'll put it on because the auction is going to set the price. We'll put it on MLS at the assessed value and then state that the property will be sold. The market will determine the price at the auction. This is merely the assessed value because we got to put something in there. We used to put 0 in there, but then the person that goes on and looks for a house between 300,000 to 500,000, we'd never come up because we're 0. So it doesn't. It's been the best option for auctions to be able to get involved with MLS.
In dealing with an estate, if I put a estate situation on MLS, even if I execute a purchase and sale agreement, there's the ability for some other third party to make a higher bid and surpass what the PNS was executed for. With an auction, does that option go away, or can they still see?
It's very rare for that option to be part of the auction because when we get to that point, it's almost like it's already been exhausted. So now they've got some sort of, either through probate or otherwise, they've got it's selling to the license to sell. And we're either working for the personal representative, in some instances a trust officer from an institution that is also in that role. So when it gets to the auction point, the auction is then, I'll tell you what, a lot of times I have to disclose whether the heirs are going to be bidders too, because sometimes interested parties will also bid because they can't agree to a price. One gets an appraisal, another gets an appraisal, and no, it's mine, no, it's mine. It's like, well, then the auction becomes the consummate appraisal for the estate. And I don't have to, but I always disclose if it's an estate deal, just so you're aware, some of the heirs will be bidding not to inflate the price, but to buy the property if it meets their level. and get out of the way if you guys take over. But I just always feel like that's important because otherwise it's like you're bidding against the house. You know. Anyone else? So my cards are there. If you ever have any real estate auction questions, or there's an auction coming up, like I said, that's not mine, I get called all the time. Hey, what about this? Because you might have a second mortgage foreclosure auction. And what is that? How does that work? What should I ask? Because I know what questions to ask the auctioneer, because I know it bugs the shit out of me when people ask me them. So in reverse, I can certainly help you to, be your best when you attend an auction. All right, everybody. Yeah? Oh, one more? Yeah, sure.
One of the things that drives me crazy in going to auctions is when the bank does particularly on mortgage foreclosure. If the bank told us up front what, that they were going to go for some crazy number, you wouldn't waste your time. And it's just an ongoing frustration.
Right. No, it's a perfect frustration. I'll tell you what. You'll see my calendar is smaller than it could be. And the reason it is because of that frustration, which I also share, because if the bank takes it back, I get a slight flat fee and I don't get a commission. So a long time ago, if I get contacted by an attorney or a bank and say, hey, I want you to do this auction on May 10th at 12 o'clock in Rehoboth, and it's a house and it's a farm. Hold on. What do they owe? Do they plan on bidding it in and taking title and handing it to a real estate broker to list for sale, or do they expect to sell it to a third party at the auction? Oh, no, they're owed way too much. They're taking it back. Okay, contact the Mass Auctioneers Association. I'm not interested. So over time, we've continued to do that. So I have bidders come up to me and be like, wait a minute, how come when I come to your auctions, it sells to somebody, and I go to the other one, and some kid comes up and reads some stupid number and everyone walks away and gets back in their car? I'm like, because I vetted the bank for you and for me ahead of time. And I probably have lost out on some commissions over time, but I find the same frustration because if they're looking for me to correct their mistake, I'm not doing that. And you're going to find now in a lot of commercial foreclosures, that's exactly what's going to happen because they can't take the hit in this. They can't take that hit of millions in this quarter on that particular asset. But on a house or a multifamily, the market's telling you what it's worth. Take it. Take your loss. Move on. So yeah, that's no auctioneers vet them ahead of time. We do every time. And again, I've lost business for it, but I think better off because people know my stuff sells for that reason. I don't want to. If this was an auction and you all showed up and this property was worth $2 million and I come in and I bid 3.5. You all just get in your car and just leave. Like, why do we even come? I got a bank check. I showed up. I could have gone to that. I could have done this. So that's, yeah, great question.
Wanted to stop bid at like 375. I'm like, it's just wasting everyone's time.
It's
showing up.
It becomes a technical exercise, and we all got used as pawns on a bad loan when ultimately that sale needed to happen and sell to that person for what the market said it was worth to just reset things and move on. So yeah, and for that reason too, I don't have any clients that do like a ton of like national clients that do a huge volume, because that's mostly what you're seeing, like the Bank of Americas. When you get outside of this part of the country to other parts of the country, because I know the auctioneers, they don't sell anything to third parties at auctions. Everything gets bought back and given to a broker. That's the only thing they do. If it sells, it's a complete rarity. My company is the complete reverse. You're going to see 9 out of 10 foreclosures will sell, because I'm going to ask them the hard question ahead of time, especially on bad loans. It's just not. I'm not going to be used for that. I'm going to do all this marketing and get everyone there and then not sell it to anyone. And that's why I'm also not huge in online auctions, because I feel like in our auctions, being second generation, people trust us and they can see who's bidding, the transparency of it. I'm not bidding against the seller or a bot or against something, an AI bot bidding against you to some point. And, in online auctions, the auction house, they know what your max bid is. So why is that not going to get pushed up by whoever they can get? Get Matty J to come in and make some bids on my behalf to get it up to the max bid that I know is in-house. Online auctions are really difficult to police. And when we do our auctions and they're on site, it is a pain in the ass because you got to get a bank check and you have to show up. But you know, if you didn't win it, you see who bought it. And that's a big part of why we have success is that.
So could you walk us through how a buyer's agent would go through do you have to register ahead of time to go to the auction?
Yeah, so there's like this whole laundry list of things we ask the buyer's agent to do. Ultimately, what they really need to do is register them on our site. We ask for an opening bid, which they can give if they want. If the better the opening bid, the better their commission. The problem you've got is in foreclosures, you're not seeing buyer broker commissions very often. Why? I used to put them in my proposal. I'd be like, we'll offer 2% to the buyer's broker. But then banks started adding that to my 2 or 3% on the foreclosure and said, well, we're giving you 5. I'm like, no. The buyer's broker is going to earn it if they brought their client and did their job, came to the viewing, came to the auction, helped their client make the decision, elbowed them to bid more, like did their job. I got to a point where the banks were penny pinching so much that I stopped proposing it because I was losing work. That was saleable work because they were counting a buyer's broker commission on top of mine. I'm like, no, you're only paying it if it was earned. In all of my private auctions, every single one, I'm working for an entity, a bank, an estate, an individual, a company, always at least 2% broker commission. They just have to register them on my website. And honestly, if they show up with their client at the auction, I'm gonna register them then because I know that they're doing their job for me. So the process that the paperwork gets put together ahead of time, populated ahead of time. So it's nice to do it ahead of time because you'll get confirmation by email and then you're feeling good. But otherwise, we'd still even handle it on site.
Okay. In an investor situation, do they also have to register ahead of time?
No, people ask me all the time, how do you qualify your auction bidders? And my answer is buy their money, period. So people come. A lot of people come to the open house. Oh, okay, I'll see you at the auction. And they come back, like, where's your $20,000 bank check? Oh, no, I don't. So, okay, get out of the way. You move over. Oh, well, I have my checkbook. Get out of the way. Well, let me show you my Merrill Lynch account. I got 180. Get out of the way. Like, you have to come. I have 10 other people there that came with a bank check, and you're asking me in front of 10 other people to say, oh, yeah, you're all set. No problem. You can just bid, and then hopefully you'll give me the money after. When I say sold, they sign over the check. Goes into our escrow. We sign multiple copies of the P&S. They get one as receipt for the money they just gave to a stranger. And then those P&Ss go to the attorneys. The seller's attorney does a draft deed. The buyer's attorney does a title rundown and the HUD. And that's it. It's like really, really straightforward. Engineer.
So is it correct that when the market goes down, and I go to the auction, I'm going to check with the auction?
You better, and it better be a bank check. If it's out of your checkbook, no bidding.
Bank check.
And then you make it out to yourself because if you're the winning bidder, you sign it over to JJ Manning Auctioneers escrow agent, and that goes into our escrow. If you're not the winning bidder, you bring it back to the bank and you give it to the teller. But if you made it out to me and you go to the different teller that you got the check from, they're like, why are you trying to deposit a check for XYZ auctioneers? Like, they get confused. So the easiest, best way to make it out to yourself, then you've got it. You got a check made out to you. Just don't sign it, just because then it's cash. Just keep it unsigned. Yes?
If the original buyer defaults, does it go to the second buyer or does it go back to auction?
Good question. I have about 20 minutes where I really drive some of the regulars crazy, but the new ones are like, okay, if there's a default, the seller reserves the right, but not the obligation, to go to the next bidder, to sell it to somebody that wasn't even there, or to not sell it at all. But 99.9% of the time, they instruct me to sell to the backup bidder. Why? Because that person came, they had a bank check, they were prepared, they've gone through the information. They wanted it done in a certain timeline. That's why they hired me. Otherwise, they would have listed it and gone through traditional. So, and I say that for 2 reasons. One is to get everyone to bid. But more importantly, that's what my client tells me to do. They just go, who's the next? And we have the ledger. Like we tape it, and we take down a ledger, and it's like, okay, and usually that at the end, it's 1,000 or 2,500 or 5,000 apart. So the winning bidder loses their deposit, and then we sell to the back. Maybe the deposit that was lost is 20, 25 grand. Sell to the backup, there was 1,000, 5,000 behind. They're making more money. So that's what happens. Yes.
So if the bank is the one who's financing the deal, the option deal, what is the minimum percentage the buyer needs to pay for the paper?
Well, first off, you need to know that if most of the closings are in 30 days, most banks, traditional banks, have a tough time getting it done in 30 days. It might take them 2 weeks for the appraisal. So I always say, if you don't know with full certainty that your bank can fund this loan in 30 days, either call Pat or don't bid, because the seller could say, we'll give them a couple weeks extension. The contract says you have 30 days. So if the bank has to pump the brakes because the appraiser's behind or something else is behind, your money's at risk. So you just need to be you need to be prepared that you could pay the full amount without the bank, if you had to bid at the auction. So I have bidders come to the auction, they are fully pre-qualified and ready to do the deal. And they do as much as they can and get everything set up. And I had one recently in Hyde Park where the guy did it. He was going through a bank. I'm like, this guy's never going to do it. And he did it all. Because I think that the mortgage broker did some things ahead of time to get, say, the appraisal process queued up early. Like they knew it was going to happen right away if the guy bought it. Whatever other things need to happen internally. But that's 30 days is tough for a traditional bank. That's why usually you have to go through a non-traditional bank, a mortgage broker that knows the different layers of lenders. It may even be that you have to go to a hard money lender. Why? It's going to be short-term anyway, so you're going to pay some points or some fees. You can finance it later when the bank is able to catch up to that timeline.
But there's no, like, it's the bank side saying how much you put down payment they're putting for the option.
So, I mean, I'm assuming that it's going to be 20%, if not 20% anyway, right? But it's not even the down payment as much as it is the timing. Because that's mostly why most of the buyers, if they're going through a lender for an auction, are using a short-term private hard money lender because they need to, and then they'll finance it properly at a proper rate through a traditional bank or lender. Right, Pat? You think that's...
Some circumstances we can't close in less than 30 days.
Right.
As long as approved. Most cases, buying an auction, they buy with private money, not just because of the timeline, but because of the condition of the property too.
Right.
Okay, so all well and good if you have traditional financing lined up, and then the appraisal goes in, and interior there's some damage. You know, it's deferred maintenance, and it's not going to pass the appraisal. Well, the bank that's foreclosing and the bank that's selling it, they're not going to do any repairs. So now you're stuck. You're 2-3 weeks in. You've only got a week left to figure it out and get to the closing table. So I find most of my clients that are buying at auction are going to use private or hard money just to acquire the property. Once they control the asset, time doesn't matter. They have all the time in the world. They can refinance into traditional financing.
And those lenders don't want to lend for more than a year anyway.
Exactly.
They're 12-month lenders. I mean, there's some exceptions, but they don't want to. They know where they butter their bread, and it's on that short-term loan. All right, well, I've said everything I can think of to say about auctions tonight, but take a card anytime. Please, it's never a bother. I love what I do. I'm happy to answer any questions. I think I've run through whatever the question is you may have, and happy to assist in the future. Thanks, everybody. Thanks, Carl.
Good stuff.
Thank you.